Hi, here's a quick update on Southern California's housing market trends. The numbers show signs the market is heating back up again. I looked at the data from CRMLS for Los Angeles, San Bernardino, Riverside, and Orange counties. So let's start by looking at prices. The median price rose slightly in March for all four counties, and this is the first rise in prices that we've seen since the Federal Reserve started raising interest rates last year. So since then, the median price has dropped quite a bit, but it's not too dramatic when we look at the year-over-year numbers. So compared to last March, the four counties are down between 0.5% and 6%. Looking at inventory, the number of homes for sale dropped a little bit during March. That's 4 months in a row of having less and less homes for sale, which also suggests the market is heating back up again. Looking at time on market, the pace of homes selling picked up in March for the first time since June. And looking at the median days on market, that ranges between 23 and 39. So that means that half of them took longer and half of them were faster. Overall, that's much slower than last year's range of 7 to 12 days. And homes are most likely sitting longer because many sellers have accidentally overpriced and it takes them a couple of weeks to adjust to the right asking price. So looking now at supply versus demand, we always are talking about months of inventory, and 6 months of inventory represents a balanced market. So anything below that is where buyers tend to outnumber sellers, and anything above that is where sellers tend to outnumber buyers. So right now, we're hovering between 1.6 and 2.5 months of inventory, which is deep in seller-favored market territory. And we've seen 3 months in a row where months of inventory has been dropping. So that means the market has been heating up little by little every month for the last few months. And I think this is the best evidence of the market heating up overall. So if this trend continues, then we can expect stabilized prices or probably rising prices over the next few months, and definitely should not expect a crash in prices in the next little while. So what does this mean? Sellers should still be extra careful to avoid accidental overpricing because the market's just not as gracious as it was at this time last year. For buyers, you can still expect that sellers are a bit more negotiable on things like contingencies, repairs, and stuff like that. But you should also be prepared for more multiple offer situations happening as supply is reduced relative to demand. So the odds that another buyer is going to be competing with you are pretty high in this environment. If you have any questions about this or anything else real estate related, feel free to reach out to me. My cell phone number is 909-576-0695, and I would love to connect with you soon.